In creating a better future for all, decarbonizing our operations is an imperative. In terms of our Scope 1 and Scope 2 emissions, our energy usage is comprised of 80% diesel power and 20% electric power. However, electric power contributes up to 47% of our carbon emissions, and replacing this with renewable energy provides a massive opportunity. In 2021, our total emissions increased in line with higher levels of production following the COVID-19 interruptions in 2020. When compared to the normal production year of 2019, we have realized the net reduction in 2021. As part of our pathway to decarbonization, we have the ambition to achieve zero Scope 2 emissions by 2030 and carbon neutrality by 2040. Kumba will participate in the broader Anglo-American renewable energy strategy through the development of a solar PV plant in the Northern Cape. This strategy also includes other renewable technologies such as wind power to ensure 24/7 green energy by 2030. In addition, our sister company, Anglo-American Platinum, is piloting a hydrogen-powered haul truck at Mogalakwena. We will evaluate these results as we continue to develop our Scope 1 emissions reduction strategy. In terms of Scope 3, iron ore has a critical role to play in the transition to a low-carbon economy. We are partnering with our customers to achieve lower carbon emissions through our high-quality ore products, which will be further enhanced by the UHDMS technology. Having a healthier environment ensures that we are creating a more sustainable future for our stakeholders. Kumba has created significant value for its stakeholders, which has increased substantially year on year. Over 21 billion rand in tax revenues and mineral royalties went to supporting government and our fellow South Africans. We increased our capital investment by 30% to 8 billion rand, and this not only benefits the life of our operations, but represents our commitment to investing in our country and local communities. While our strong financial performance has delivered real shareholder value of 43.5 billion rand, with our empowerment partners receiving more than 10 billion rand in dividends. Safeguarding local livelihoods is extremely important. We paid 5.6 billion rand in salaries and benefits, and 79% of our staff are employed from local communities in the Northern Cape. We also supported BE suppliers with 10 billion rand of spend, of which 4 billion rand related to host community suppliers. One such initiative is the awarding of a 1.6 billion rand mining contract to a community-based joint venture to mine iron ore at our Kolomela mine. This joint venture supports Gamagara communities and women-owned businesses. These and similar opportunities will go a long way towards helping our communities thrive. I've now been in the job for 6 weeks, and my first priority was to get out and spend time with our team across the operations. In all my engagements, what has stood out for me has been the quality of our people. In those interactions, it's clear that we have a team that is fully committed, ready to challenge and to be challenged to make this business the best we possibly can. I welcome that attitude because we live in a world with so much uncertainty, and we need to especially focus on all the factors that we can control. That is very much the priority, and I'm pleased that through Kumba's resource endowment and the Tswelelopele strategy, my first take is that we have a really good base to build on. It all starts with making sure that we approach everything with a shared set of values and a commitment to operate the business responsibly and sustainably. That's the right thing to do. And we are seeing more often that if you don't operate according to a higher set of values, you will either put your license to operate at risk or fail to sustainably grow your business. My discussions across the team have shown real engagement on this topic, And it's a priority for me that this remains core to our culture. I'm also pleased to see that Kumba has a good safety culture demonstrated by a strong safety track record. One of the other distinctive features of Kumba is the quality of our product. This clearly resonates with our customer base, who are increasingly looking for support in meeting their own greenhouse gas emission targets. However, we cannot rely on pricing to secure a profitable business. We must take control of our own future, and therefore operational excellence is critical. We have done much already in the space, but I think there's more that we can do as we focus on getting the right product to the right customer at the right time. Therefore, overall for me, there are two priorities. Firstly, we must deliver on our purpose of reimagining mining to improve people's lives through living our values and making sure that our sustainable mining plan is a competitive advantage. Secondly, we must push hard to make Kumba the safest, most responsible and sustainable business it can be. And it's a push that we start from a strong foundation as we focus on our priorities on building on our Tswelelopele strategy going forward. Operational resilience combined with strong iron ore demand saw us deliver a record EBITDA of 65 billion rand, representing a 41% increase year-on-year. Our balance sheet strength combined with free cash flow generation of 30.5 billion rand allowed us to declare a total dividend of 103 rand and 20 cents per share. This represents a 69% year-on-year increase. These successes combined enable us to create significant value for all our stakeholders.
The strong iron ore price environment, together with our marketing team's ability to maximize premia, enabled a higher average realized FOB price of $161 per ton. This is a 42% increase year-on-year. When it comes to costs, our savings are closely linked to our operating efficiencies. Our operational efficiencies decreased, meaning we did not realize the full cost savings that come with improving efficiencies. Despite this, we achieved over 900 million rand of savings against a target of 1.1 billion rand. Our focus on cost containment and maximizing market premia was more than offset by a stronger rand and higher freight rates. Headline earnings per share increased by 46% to 103 rand and 65 cents per share, allowing the board to declare a total dividend of 103 rand and 20 cents per share.